All right, welcome back. I find the recent market movements pretty fascinating. There are a lot of working parts that touch each other in so many different ways. Now, recently we had Saudi Arabia announce some surprising oil production cuts that extended through August, right? Well, they've now pushed that out until the end of next year, the end of 2024, December of 2024. I mean, that's attracted some definite attention. Now, especially in a world of this weaker dollar, that's going to be a big deal. We've just gone through 10 interest rate hikes to help keep prices down. With those two things on the cards this month, or with another hike on the cards this month, that's going to be a big deal, right? Oil is such a big part of the CPI. It affects a lot of the points in the supply chain and in production. Just like Congress spending a lot of money as the Fed keeps raising rates, these production cuts and cheaper dollar could also send oil prices higher, negating a lot of what the Fed has done so far with all those interest rate hikes. Oil's a wild card, and inflation hawks need to really kind of stay vigilant and keep an eye on it. My next guest is all over this stuff. Please welcome to the show the Queen of Crude, Carley Garner. Thanks, Carley, for being on. This is one of those weird ones where if you start to see oil climb because of these false OPEC production cuts, that could be a thorn in the side of what the Fed's been trying to get done all along.
Right. Obviously, it's not something any of us want to see unless you're long crude oil futures, of course. The thing is, this move feels a little desperate to me. I mean, basically, OPEC and Russia are throwing the kitchen sink at oil to keep prices higher. And it's taken all of that plus a weaker dollar, plus a higher stock market. The stock market tends to drag crude oil up, and we're still only trading at 75, which is a level that a year ago most people thought was impossible, let alone did they think it was going to be the top of the trading range, not the bottom. So we're definitely in an interesting spot here. I do think that OPEC production cuts, in addition to all types of other things, China coming back online and picking things up, I think that is going to eventually push us a lot higher in crude. Also, speculators are really, they're not net short, but they're not net long as they normally are. People migrate to the long side of crude oil no matter what. It's a habit the markets are in, but they're holding the smallest net long position that we've seen in over a decade. So at some point, I don't think it's immediately, but I think eventually, let's say in the next 2 or 3 months, I think we start to make our way higher and probably into the 90s. So I think OPEC's basically laying the groundwork for that to happen, but I wouldn't expect prices to just jump off the jump here.
Yeah, and the more research and then the people we talk to, maybe not on this show per se, but there is a supply issue, but we always have to be careful about getting too out over your skis when it comes to supply, because you also need to have the demand. And we saw China miss their GDP today all over. It was a big number. They still missed on what they're expecting to grow by, and they've been trying to stimulate that economy. That really hasn't come to fruition, and or some folks would say that the reopening trade has already been done for China. And then we've got Europe's in a recession now. So I'm not, I keep talking about my three-legged stool, Europe, Asia, and the U.S. Well, those two of those legs aren't doing so hot, so that might affect that demand side of the equation, which we struggle with in a lot of other commodities, right?
Absolutely. I think you're on to something there. I think you're hitting it on the head. The thing is, also price action matters, and the reality is crude oil is making lower highs, and it's been doing so for a long time. And until that changes, we'll probably basically stay in this little consolidation range. I meant to point out also, OPEC is not the only one cutting production. If you look at the U.S. rig count, we've been slowly dropping. The U.S. rig count has dropped 90 units in the last since December of 2022. So we're pulling back a little bit here. Production hasn't fallen off a cliff in the U.S., but it is slightly starting to taper here over the last week or two. Now, so that's something to keep in mind.
Okay, just because that's an interesting stat. 90 rigs we've lost. Is that what you're saying?
Correct, yes.
Okay, so what do we normally run? I mean, what is a big number for us? What does our rig count normally look like?
That's a good size. So the all-time high, I want to say, is somewhere around 800, 870, somewhere in there. Yeah, so we've been as low as like the 200s, low or high 100s, and that was in March 2020. So it can vary quite a bit. And the thing is, we get more efficient as we go. So it takes a lot fewer rigs now to generate the same amount of oil as it used to, but it's a sign that we're pulling back along with OPEC.
Yeah, I mean, so 90 rigs is like 10 to 15%, depending on how many we started with, right? So that's a decent chunk of your production. Yep.
It is. Yep, absolutely. And eventually it's going to matter. I'm not bearish crude oil, but I don't think that buying here in the mid 70s is a good idea. If you're wanting to play the upside, I say wait for the low 70s. That's where you get some better, or I'm sorry, the mid 60s is where you're going to get some traction.
Yeah, what we used to say is if you buy here, you're going to have to take wedding vows because you're going to have to own it a long time before it starts to pay you back, right? Because that thing is going to, go down to 65 before it goes up to 85, and that's going to be painful too. I really appreciate it. I mean, because it's interesting to me. I do believe we are in a supply issue, but it's just timing when you want to get behind that story because the demand has been sputtering, and it's not just oil, but it's a lot of other things that we look at, and that's what makes me a little bit reticent to jump in with both feet.
Absolutely. I mean, like I said, it's kind of taken the perfect storm just to get us from 65 to 75. Right. So it's a little bit suspect going forward.
Yeah, that's great points. I mean, that's going to be, make sure that everybody out there kind of enters that market with a degree of caution and probably wait until it looks really, really bad and they've sold it down really, really low before you want to get involved there. I appreciate that coming on because I agree with you. That's what it sounds like and smells like.